All right, good morning. Today is November 2nd, 2022, and I am back with another edition of the live show. And today is, of course, as everybody knows, today's Fed Day, the Fed announcement day, where they're expected to raise another 75 basis points. And, I think I must have mentioned this a couple weeks ago, that seems to me that the Fed is the most likely scenario, and this is probably, I don't know. I mean, you always see what's being priced in and what the conventional wisdom is, and this may or may not be what's priced in or conventional wisdom, but my guess is, they raise 75 basis points today and 50 basis points in December, and then wait and see, right? And so I think I saw mentioned somewhere that there's expectations of another 50 basis points in January. So I would say that in December that it's very likely that they would, after they raise in December, I would say that they're probably going to take more of a wait and see attitude, would be my guess. But hey, you never know. And so, now everybody's talking about the terminal rate, which fluctuates, and that's the rate at which I guess they stop raising, right? So, lots of crazy stuff going on, and they need to they need to bring inflation down. And so there's a lot of debate about whether inflation is going to come down on its own. And man, there's so many moving parts to this puzzle, and at this point it's really anybody's guess. So I don't think anybody actually knows, right? So a couple interesting things. I think JP Morgan came out and said something about the market could rally 10% if they pivot. And that's the other thing I keep hearing constantly for the past, well, I don't know, for a long time now. Everyone's talking about a Fed pivot, and the terminology is even getting a little mixed up, because to me, like, the term pivot means that they would stop raising rates and then lower them, right? Like the pivot would be when they lower rates, not just when they pause. I mean, but a lot of people that I see on TV and read on the internet, have come to use the term pivot as, like, slow down the rate hikes or pause them or whatever. So, I mean, they're not going to pivot in reality if what pivot means is that they're going to stop raising rates and lower them because, the economy's fall and goes into a recession. So, and that's the other thing is, there's debate whether we're in a recession, we're headed for a recession. There was a Bloomberg article within the past couple of weeks that said that a survey of economists said there's a 100% chance of a recession next year. So just a lot of wild stuff going on. Um, and say, hey, who knows? I mean, who knows what's going to happen? And I do have some interesting ideas. Just looking at the chart, and see, that's all this other stuff is neither here nor there, but got to look at the chart. See if I can, whoops, see if I can do this properly. What I want to do is extend this chart out to the end of the year here. There we go. That way, see down here we got 2022. Let's see if I can bring this up just a little bit. So we got 2022, and of course the all-time high, and then we got 2023. And so what I wanted to do is extend this trend line just for the fun of it for the entire year. There we go. So I'll explain what I see on this chart. It may or may not be viable, But there's actually a couple different scenarios I have in mind that the way they could play out. One is that the market somehow, and keep in mind we're in the seasonally strongest part of the year. This latest little rally here has everyone sort of convinced that the bottom is in. And well, I wouldn't say everyone, but it's like anything, it's debatable. And so, but I got to tell you that little spike low at 3,500, which was, as we looked at last time, was right around 61.8. It was like a fib retracement of the prior rally from the pandemic low to the high here. And so anyway, yeah, that's a pretty solid little reversal spike day or whatever, all the way down to stands out there. So that's a definite pivot low. So here's a couple scenarios I'm looking at. If you look at this pivot low right here in May, on this particular day right here, you got like sort of this rally and then up to that congestion. Remember that for like a couple of weeks we just chopped up and down in this range right there, and then you can see what happened. Sold off quick and made a lower low. But so in one scenario, I can envision like this current rally being similar. Well, of course, today is likely to poke out of the top or the bottom of this little congestion area. But the rally we have off of this recent low here is sort of manifesting in a similar fashion to this, and so there's every potential that that it could just sell back down from here, right? Sell back down and maybe retest the lows, or maybe make a lower low. Who knows? Or the other, I think, probably the more likely scenario, and as much as I would as much as I would like to think that it follows this path, I think the more likely scenario is that it rallies up towards this trend line. And so I could be 100% wrong in the direction. I mean, this thing, I've always thought, and I've said a couple times this year, that this year reminds me of like 2018. And in 2018, the market sold off, into the end of the year, right? Like into Christmas Eve or whatever I think was even a big down day, or that was the reversal day. But 2018 was one of those years where, the market was kind of rough, and then everyone was sort of expecting a year-end rally, and it didn't happen. The opposite happened. The market basically tanked going into the very end of the year. And I think it ended the year down like 6% or something like that. It was kind of an unusual year. No big, huge big deal, other than the fact that it had started. 2018 started off as like the best January in 30 years or something, and so everyone was thinking, so goes January, so goes the year, and then that theory didn't hold up in 2018. Anyway, it's one of two things is likely to happen. But if this current rally, and there's probably going to be some ups and downs in between, but one thing that I was looking at, and you know me, I like to look at instead of focusing on like the price bars, look at the sort of the shape or the pattern of the white space, say above the price bars up to this line, right? So you have a sell-off and then this sort of bounce, and you're looking at this white space here, and then you got like sort of a deeper sell-off and then a rally to the trend line. You had the same thing here, like you had this sell-off down here and then a bounce. So this little area right here in February would be sort of symmetrical to the congestion area in June, right? So the sell-off and then the bounce, and then, bigger sell-off and then a rally up to the trend line. And then you got sell-off and a bounce, bigger sell-off and a rally to the trend line. Now you got the sell-off and the bounce, right? And And so, the bigger sell-off, sell-off, and maybe this was the bounce. That's sort of what I'm thinking here. When I look at this pattern, kind of close one eye and look at it. Sell-off in this little bounce, and then, rally up to the trend line is what I'm thinking. And so, that could happen kind of quick. It could rally up to the trend line, or it could, sell off a little bit first. You have a W pattern right here, which is this W pattern is kind of interesting because typically these W patterns, and that's kind of one too, but those are one of the most powerful patterns out there. And there's a little one there, even though this one obviously failed, but this little sort of W pattern right here, this one not so much, but typically over the years, I've seen so many of these things, and it marks the lows, and then the market rallies. So, are the lows in for the year is the big debate right now. It's hard to tell. I don't think that the Fed is going to, pull any big surprises, right? I don't think they're going to pivot, and so, everyone in their minds, or I won't say everyone, but in the minds of a lot of these talking heads and that, they act like the Fed is just gonna stop fighting inflation, right? And so inflation's probably going to come down, but here's the thing, it's been an entire year. It's been well over a year of inflation, and I think that's their number one goal is they got to get that down. Otherwise, they're just really going to lose what's left of their credibility, I suppose. So, and I mean, they keep warning the stock market and warning investors and that there's going to be pain and all this speculation and every little, sort of thing that investors can latch onto for a rally is, and so, hey, for all I know, we're going a lot lower eventually. So it'll be interesting, but I mean, it's just kind of looking at it's a zig and then a zag and then a zig and then a zag and then a zig and then a zag. And so it's going to get real interesting if we, zig back up to this trend line right here. The weekly chart's a little bit more instructive, I suppose. I always like looking at the weekly charts because, people, it was funny yesterday, there was it was kind of a sell-off day after this big rally for a couple weeks, and people were already starting to act like it was a big deal. I flip over to the weekly chart, and and I mean, it was just a little tiny bar. Of course, we've got, we're down 0.5% today, so the bar's a little longer, but the weekly chart sort of has a similar pattern, I suppose. These past couple of rallies that took it up to this trend line here sort of went in a straight line, basically. I mean, there was some congestion down here, but this weekly bar right here that we're looking at this week. Now, of course, today's only Wednesday, but this is one of the narrowest range bars on the whole, of the whole year, other than this one, right? Like that one, is probably a little bit. Well, there was another one here, but you notice that there's only a couple of narrow range bars so far this whole year. The rest of them have been extraordinarily long range bars. So with today's Fed announcement, I expect that it's either going to break the high of the week or the low of the week, right? I won't say after the announcement, but by the time the week ends up, we're probably, we could be looking at 37.50 or we could be looking at 39 something. 37s or 39. So, and you can see where we are right now. So, I guess what would surprise me the most is if there was very little reaction to the Fed. I mean, everybody kind of already knows what to expect. And, if you read enough stuff like I do, you see you see what the expectations are. Like theoretically, the bond market, has a certain expectation day to day of what the terminal rate will be, odds on what the rate hikes will be and the different things and that. So, there's a couple of wild cards. I mean, I usually lean towards being a little bit bearish, right? As you guys know. So, I mean, just being objective over here, I laid out like two scenarios. One is one is that we rally back up towards this trend line going into the end of the year. And I mean, heck, it's not that far away. We could even poke it. What I don't have on here is a 200-day moving average, which is something else that I was looking at earlier today. Um, Let's see, where am I going to find the 200-day moving average? Here we go. Moving average, simple. Change it to 200. There we go. Because it kind of makes sense. Let's see. Yeah, there we go. So, as we discussed back in August, the 200-day moving average in that downward sloping trend line like literally coincided with that little spike high of that last rally. And so same sort of thing here. The market could continue to work its way up, and then sometime here in November, and that's that's provided that it doesn't just reverse here, right? And so let me see if I can. Yeah, let's see if I can draw like a little. Here we go. Whoops. So, here's scenario. Here's the first scenario I talked about is that you got this current rally manifests in a similar fashion. Whoops, I didn't mean to do that. Manifests in a similar fashion as to this one, right? Where you had the big sell-off, and then you get a little bit of a bounce and congestion, and then the most instructive thing about this sell-off in June is how quickly things can change, right? Because I distinctly remember after this rally and while the market was kind of grinding in this little zone right here, I distinctly remember that the that everybody was almost certain that it was gonna rally up from there. The conventional wisdom was that it was going to rally higher after the congestion, and then this was like, I got to tell you, this little 3-4 day sell-off right here was incredible. Just the way that it sold down, gapped down and sold more, and then gapped down and sold more. I mean, that's extremely unusual for the market, to have like sort of those breakaway gaps like that and sell down in 3 days. I mean, and you're talking, a few hundred S&P points in 3 days, just straight down. And so, never lose sight of the fact that something like that could happen again, right? And so, back over here, this is a very similar sort of spike low prior to that, very similar spike low to what we've had here. And like I said, the time of it, it's not just price, it's time. And so I see, I see an analog there. There's a potential analog there, and literally something similar could happen. We could sell right back down. And so, keep that in mind. The thing of it is, you gotta kind of keep an open mind and be objective because it's all about the odds of one thing versus the odds of another. And there's a lot of stuff that can happen too, right? See, right now, um, I mean, all this aside, there's a lot of crazy stuff going on in the world, as you know. There's the midterm elections, right? And so, that's in the mix. There's once the midterm elections are over, things may look a whole lot different because it's obviously in the best interest of the current administration to, keep gas prices down, and so they've been, selling off the strategic petroleum reserve, and it's in their best interest to make everybody think that everything's just peachy, going into the midterm elections because the Democrats obviously want to keep the, you know. But so anyway, after that, which is what, next Tuesday? Yeah. Um, Literally like, a week away, a week from today, then things are going to be a lot different. And I've read stuff out there that says, if the Republicans, if a lot of Republicans win, or if they take the House or whatever. I don't follow politics or even like to talk about it. But they say it could, that could set us up for a huge rally, right? And so anyway, most years, the market tends to be seasonally strong. There's a thing called the Halloween indicator. And basically, the market just tends to want to rally into towards the end of the year. And so, upside target. Obviously, there's going to be some resistance here at the 200-day. There's going to be resistance to that downward sloping trend line. A couple of interesting things is that small caps and mid caps. And equal weighted S&P are starting to outperform the actual S&P because like the big cap stocks are getting hit finally. So anyway, let's see if I can do this. So I'll just sort of outline my scenarios. One is that we get something similar to this area here, and we consolidate a little bit and get rejected. And then the other scenario is that it works its way, and obviously I can't, predict the angle of this, and so it works its way up to, I just put it right there, right at the end of the year. So we get a rally up towards. And that would be, that'd be a heck of a way to start the new year, right? And you got the 200 days kind of falling there. So anywhere sort of in this area, but up towards 4,000. And then of course, there's always the possibility, maybe, maybe they declare peace in Ukraine or something, and we break out above that trend line. But anyway, that's at least at this point, and it's kind of halfway between the lows and the trend line. So keep in mind, just because the market breaks over the 200-day or even over that trend line, I mean, look back here in March and April, right? Rallied over the 200-day, spent some time up there, and then right back down. And so that's a possibility too. But the first upside target would be up there. Interestingly enough, let's see if I can put like about a week ago, or maybe a week or two ago, within the last couple of weeks, Goldman Sachs lowered their year-end price target and said that the S&P is going to close the year at 3,600. So let's see, where's 3,600? It's like right about, there, close enough. So there is Goldman Sachs year-end price target. So that's kind of interesting because that's actually, I mean, that's kind of basically right at, the prior lows. So hard to tell. Anyway, real quick, so that's my S&P analysis. Real quick, Qs are kind of set up the same way. The recent rally here in the Qs is not nearly as significant as the rally we've seen in the S&P, and I'm going to guess that's because tech is weak and energy is strong, right? Let's look at and financials. Let's look at the financials here. Financials have had a pretty significant rally up here. Sort of got like that W pattern forming. So that's been pretty interesting rally right there. Um, Take a look at like TLT. So in theory, the rising interest rates are what's sort of driving the sell-off, and you can see that. Well, you can see that here recently, like last week or whatever, but interest rates are rising, and so this is going down, right? Like this goes down when interest rates are rising, and it's been a brutal. I think that I've read some statistics that say something to the effect of, that this has been the worst. This has been the worst start to a year, like as we're going right now. This has been the worst start to a year since like the 1930s or something for bonds. Um, and yeah, I mean it's nasty, but you had sort of that sell-off and then that capitulation low, and so now it's rallying, and that's what's coinciding with the little bit of a near-term rally in stocks. Um, let's see, Vanguard Total Bond Index, yeah. And so here's the thing about bonds, right? Is that I probably mentioned sometime a long time ago that when interest rates are zero, there's nowhere to go but up, right? So, I mean, it just kind of makes sense, right? Anyway, so this gives you an idea, and I don't even want to. I'm not going to switch this to well, maybe I should, just because it's kind of important. So let's just see here. I actually have oh, there we go, performance. Yeah, so being safe in bonds, and that's not necessarily the high there. Where's the high? Huh, interesting. Okay, so there's the pandemic, and then I just wanted to get an idea how much this is down from the all-time high. There you go. Well, that's pretty significant. And so from back here in the fall of 2020, but even year to date, I mean bonds are what old retired folks are in because of the safety of them, and so to lose 15, 16, 17% in 10 months in bonds wipes out. I mean, just wipes out years worth of dividends or coupons or whatever you want to call them. So yeah, this is super ugly. And of course, the 60/40 portfolio and all that good stuff I won't get into, but anyhow, um, tech's been kind of weak, and there's ARK. Obviously ARK peaked, way back when. So I'm seeing some stocks. I forget which one it was. I looked at big brand name stocks that are now trading like down below the pandemic high. So I always like to zoom out on a chart to the pandemic sell off, and then look to see where the price is in relation to that. And it's amazing how many you know big sort of brand name stocks or whatever are down around the area of either the pandemic highs. So this was obviously the rally off the pandemic lows up to whatever high you see on the chart was the Fed just pumping whatever they could in to save the economy, save the world. So anyway, ARK is sort of my proxy for risk on, risk off, momentum type stocks and that. And yeah, it's had a pretty little decent little bounce off of the lows, but and it could theoretically be forming a bottoming pattern, right? I mean, you could draw a trend line like this, but boy, is this hey, this is always just like super risky, because I just don't see like huge risk appetite coming back into the market. I really don't. So real quick, we looked at XLF. Let's look at XLE here. Yeah, energy stocks, the place to be. Although Yeah, I mean, look at that. So XLE is like right back to these prior highs here, and then look, it's just been a straight shot up, and then all of a sudden, like today, it's red, which is kind of interesting. Let's see XOP. There's some new energy ETFs. I had one. XOP is a little bit better of a view of energy, in my opinion, because XLE is so heavily weighted in ExxonMobil, which has just been on a tear here. Pretty amazing. That's a pretty amazing chart because, off of this low and then straight up. And so a lot of weird stuff going on. The price of oil. The price of oil is kind of being artificially held low by the administration releasing strategic petroleum reserves, which is, I don't even want to get into all that, but anyway, the thing of it is that I believe that they announced that somewhere around 70 or $72 a barrel, that's where they want to refill it. Right? So, real quick, I'm almost done here. I just want to, being Fed Day and that, there's only so much stuff I can talk about because until we see, how the market reacts to what the Fed does, and there's just no telling, there's no gauging. Everybody's, waiting for the Fed so that they can kind of rejigger, what their expectations are going forward. You can't really form an opinion about, what happens next until we hear what the Fed says and see how the market reacts, which is the most important thing, right? And the funny thing is that the actual announcement is one thing, and ever since they started doing these press conferences after the announcement, that's what really holds the weight. It used to be back in the old days that they'd release the Fed would release the interest rate announcement, and the market would go haywire for a little while, and then everybody would, read the statement and then, basically try and figure out, okay, so now what? Right? Now we got these, Jay Powell press conferences afterwards, and the market is like hanging on every word that he says and every question in that. And so until that's over, then that kind of adds a little excitement to the mix, and it's kind of enjoyable but here's the thing: is the Fed's in a tough spot because they've lost a lot of credibility, because first they said that all the QE was not going to cause inflation, and then they said inflation was transitory, and they pretended there was no inflation when the price of everything was going up. And so it's just been, sort of an epic disaster for years now. They've tried to, raise rates and go on the hiking path they're on now. They've tried this before and then had to abandon their thing because the markets were, going into turmoil. And I'm not just talking about the stock market. So, but anyway, as long as I can remember, they've never had to worry about the public outrage and political outrage of the type of inflation we're seeing now, the highest inflation in 40 years that's persistent. And so anyways, they've painted themselves into a corner. And the other piece, I keep talking about all these pieces of the puzzle. There's 10 of them I haven't even talked about. Like the strength in the dollar has been something, and economies around the world it's really in turmoil and experiencing worse inflation than we are. And here's the other thing is that, the dollar and the stock market kind of have an inverse relationship. And so if the dollar starts falling, initially people are going to think that's great for stocks, except for the fact that if the dollar were to fall, that's going to make imports more expensive, right? And so, the strength in the dollar has kind of been helping in a way, keeping inflation lower than it would be, because we import just about everything. Everything you buy is like made somewhere else and imported. So if the dollar strength starts reversing or whatever, then that's going to have, an upward pressure on inflation. And of course, oil's the big one here. So I went back as far as this chart goes. Boy, look at this. I mean, this is crazy. 2007 to 2009, that was one crazy move in oil. And the scary thing is that this, kind of looks a little bit similar, but and so all the talking heads that come on CNBC will say, well, soft landing this. Maybe we get a mild recession that, and so anyway, so let's see. Based on all this, and it was probably back here when I forget when it was, but oil futures. Remember when oil futures went negative or whatever? So this oil was like going crazy, right? And then somewhere in here they started tapping the Strategic Petroleum Reserve, which really distorts true price discovery, in my opinion. And so it remains to be seen. What oil does from here, but anything under $100 a barrel, I guess. Given all the constant inflation over my entire lifetime, oil's still probably relatively inexpensive here, under 100. And then right down here, in between these lows and that 200-day moving average is where they think that they basically I guess the administration has sort of set a floor on the global price of oil because they're saying that they're going to refill the Strategic Petroleum Reserve somewhere between around 70, $72 a barrel. And so anything below that, people are they're going to buy. So that's another thing too, is when we talk about inflation, is the Fed doesn't really control the price of oil. And so after the election, or any sort of geopolitical type of weird thing that happens, could send the price of oil, once it goes back over $100 a barrel, then inflation starts creeping back into the mix. And so it's just there's a lot going on out there. Just a lot going on. One last thing here, as long as I got the weekly chart in this, look at that pullback to the 200-week moving average. Let me look at SPX here. See how that looks. SPY and SPX, a little bit different look, but yeah, it's just kind of interesting. The 50-week and the 200-week moving averages also are kind of relevant on the weekly chart. And we had a couple little pokes at it, kind of bounced off of it, poked below it. That very well could have been the near-term capitulation move, and so. Yeah, I mean, so a couple different scenarios here, basically. Whoops, I didn't mean to do that. I'm trying to move the chart, and it's instead of moving the chart for me. Hang on, I know how to fix that. There we go. So there we go. There's a couple of different scenarios. The one scenario is the rally back up towards that trend line, and that could, I just happened to make it coincide with the end of the year, but it could happen faster. I mean, you could be, the market's kind of crazy. I mean, like back here in July, it just ran straight from the lows straight up to the trend line, and so there's every possibility it does that. It could run up to that trend line. It's just hard to say. So here's the thing, is that the other scenario, the bad scenario, and like I mentioned geopolitical things, the more that I read about what's going on out there in the world, I mean, there's talk of Iran attacking Saudi Arabia, and you know what that would do to the price of oil. you got North Korea and South Korea, exchanging rockets last night. And, of course, you got the whole Ukraine thing, and Russia's like gearing up their personnel. And then, now it's coming to light. You got U.S. boots on the ground in Ukraine. And then, of course, there's the ever pending, China taking over Taiwan. And so, if any of these hotspots like start to really erupt, then you could see the market sell off pretty darn quickly. And here's another scenario. And so I would say if everything remains relatively normal and this and that, nothing too outlandish happens. But on the downside, like if for some reason this thing manifests in a similar fashion to what I described, where I have the circles there, I mean you could see something to this effect. You could see something to like another lower low basically. So, and things could happen quickly. So there you go. So that's there's that scenario, and then there's that scenario, and quite frankly, I'd give it probably a 50-50 chance. It depends on how things unfold from here. So um, anybody that's positively sure of one outcome or the other has just got some sort of confirmation bias, because there's absolutely no way to know. So anyway, there you have it. Thanks for tuning in. We'll see what happens with the Fed, and I'll see you back here next week.